Nigeria's equity market recorded a 57% return in the first 7 months of 2026, driven predominantly by domestic capital rather than a resurgence in foreign portfolio investment. The managing director of Coronation Asset Management, Agiviosi, has said Agi Imokunde, who spoke during the Coronation H1 2026 Capital Market Review and Outlook presentation, said the performance of the Nigerian Exchange Limited reflected stronger domestic participation, improving macroeconomic conditions, and rising investor confidence. As of 31st July 2026, the NGX All Share Index has gained 57%, while total market capitalization grew by 58.9 trillion naira to close at 158.2 trillion naira, citing Bloomberg data. He noted that the performance placed Nigeria among the world's strongest performing equity markets in dollar terms. However, Agi Imokunde cautioned investors to assess whether the rally represented a sustainable structural recovery or a temporary market re-rating.
With the central bank expected to maintain rates broadly at current levels, and the OMO bills now reopening to a wider investor base, the short end of the curve is likely to become increasingly crowded. The easy returns have largely been captured. The opportunity now lies in extending duration selectively through quality credit, infrastructure debt, and carefully chosen fixed income exposures. At Coronation, this conviction underpins our continued commitment to infrastructure financing, particularly in sectors such as energy and transport, while Nigeria's long-term capital needs remain significant. Second principle, pursue selectively over broad exposure. A market that has rallied more than 55% of domestic flows and experienced significant re-rating in several large cap names is not a market that rewards indiscriminate exposure. It rewards conviction. Investors should focus on businesses with strong earnings momentum, sound governance, I repeat, sound governance, liquidity and clear pathways to benefit from renewed foreign participation. And thirdly, position ahead of catalysts. In a more optimistic scenario, reclassification decisions by index providers could attract significant international attention and massive capital flows. The best opportunities are often identified before consensus recognizes them. The repricing, should it come, is likely to be swift and concentrated in companies with strong liquidity, free float, governance standards, and disclosure practices. Those who wait for certainty will almost certainly pay a higher price than those willing to position for probability. But then, this is a shared responsibility. This is the moment when our industry must rise to its broader responsibility. Nigeria's capital markets do not simply need capital, they need trust. They need transparency, and they need institutions willing to be judged by the quality of their thinking, not merely the size of their returns. That is the standard we hold ourselves to at Coronation. And it is the standard that I believe asset managers, market operators, regulators, and all participants must hold one another to as this market continues to mature.